We recently presented a note on the equity outlook for the Indian investor, and I'd like to spend the next few minutes talking about this particular note that we made. Uh, the broad updates for India is that we are passing through a post-COVID uh, economy right now. Right from when the lockdowns were enforced in March, April, May, uh, in the first quarter we had a GDP of minus 24%, uh, and thereafter, with some recovery, it was minus 9% in the second quarter. Uh, we are in an unlocked phase in the economy where mm, much of the business activities can be undertaken, but with certain restrictions or standard operating procedures. So we have to take care that uh, we do not increase the risk of infection or coronavirus infection for each of us. Several sectors have been affected, such as travel transportation, uh, hotels, restaurants, social businesses. Uh, on the other hand, several sectors have actually done quite well in spite of COVID. Sectors such as IT services, pharmaceuticals, specialty chemicals, even some food categories. The government of India has also stepped in with several stimulus initiatives, three phases of stimulus, totaling up to almost 15% of the GDP, provided to many sectors of the economy as well as to the people who have lost jobs in order to uh, revive the growth and the economy. The corona pandemic, which has come into the Indian economy, we fought it well with a strict lockdown in early months, which actually prevented a big initial surge. So the Indian hospitals and doctors got a chance to understand this virus better, and so that by the time in May, June, and July infections increased, they were able to handle it in a better manner. Even so, by today, we are number two in the world in terms of total number of coronavirus infections. However, the per day new cases peaked in September this year at about 1 lakh per day, and thereafter we have seen a steady fall, so that by today we are at about 40,000 new cases per day, which is, in my mind, a substantial reduction. So it looks like we are slowly but surely winning and controlling this virus infection in India. Even if there is a second and a third wave, we know what to do, and uh, I think we'll be able to control this infection in India. Globally, however, the news is much more grim because in USA, the number of cases has risen sharply. Uh, it's the worst hit country, and there has been a second and a third wave, and the number of new infections per day has kept on increasing. So we really don't know when the peak will come and how high it will go. Uh, Not so bad compared to USA is Europe, but even there we have had a second and a third wave recently, perhaps because of the colder weather as winter comes in. So in these countries, they are looking at a situation where they are still suffering and trying to fight against this pandemic. The Indian stock market reacted very sharply to this pandemic, and from highs in January, it fell very sharply in March. So Sensex fell from 41,400 in January to 25,900, a 37% fall, as people try to understand this new virus and also predict uh, the short and medium term impact. As the understanding improved of this infection, the stock market revived, and the investors started penciling in outlook that there should be a recovery from this infection in the Indian economy, and uh, so that by now in November we see that the index Sensex is at 43,900, 6% over the January highs, and as high as a recovery of 69% from the March lows. This kind of positivity is also coming in from due to another reason. In the last 4 to 5 years, India has undertaken a number of deep reforms in areas such as GST, where there is an all India GST rate, which covers most of the consumption products and services. RERA has been implemented for real estate reforms. Black money war is happening so that tax compliance improves on transactions happening. The ease of doing business has improved in the Indian economy in the last few years. And finally, not the least, the Indian bankruptcy code has come in, which actually helps companies to close in an orderly fashion, and helps protect the assets and some of the depositors and creditors, uh, so that the company or the assets can be revived uh, in future. So the IBC code is going to really help uh, in some of the revival situations in the economy. It also helps that we have a good political stability in the center in India, and the most recent initiative that has been undertaken by the Indian government is Atmanirbhar, where uh, production linked incentives have been offered to the new manufacturing capacities set up in the Indian economy. The focus has initially been on electronics, where we import a vast amount of products across mobile phones, computers, and other electronics. So the focus is on asking domestic manufacturers as well as multinationals to set up in the Indian economy manufacturing facilities, thus saving on foreign exchange outflows, as well as setting up large capacities in India, which can in future be used also for exports in addition to the domestic demand. The uh, uh, the good moves for the electronics sector have now been extended to sectors such as defense, pharmaceuticals, chemicals and specialty chemicals, automobiles, and white goods and other consumption gadgets and products. So this is expected to be a very good initiative for jobs creation in India, fresh investments in new manufacturing in India, saving of foreign exchange, and earning of income in foreign exchanges on export. The post-COVID, we have found that the Indian IT services has done very well, because many enterprises all over the world have moved necessarily to work from home for the employees, and this is enabled through the IT services and digital solutions provided by Indian IT services companies. Meanwhile, the US-China trade war has happened partly because China was running a very large surplus on trade with USA. So USA has imposed tariffs on many imports into USA. And also many other countries and companies have realized that they are over dependent on China for manufacturing and are working on a China plus one strategy. So this is the opportunity for India to be to attract such companies and countries to invest in India and uh, set up alternate manufacturing bases uh, in India. For example, a recent success was Apple Incorporated of USA has set up many new mobile phone manufacturing lines in India, which will cater to initially to the domestic demand and in future to exports from India. As a result of uh, the recovery of the economy that we are seeing from COVID, as well as uh, the Sensex moves and the reforms initiatives by the government of India, we can conclude that we can see that there's surprising strength in the Indian stock markets. This is not just due to the positivity of the Indian domestic investors, but also due to large liquidity inflows from foreign investors who are very positive on the Indian economy going forward. It also helps that the interest rates on loans has come down sharply in the Indian economy. This helps a lot of companies with debt who have taken loans to reduce their costs. It also helps to fund new capital expenditure initiatives. The government of India stimulus as well as global interest in Indian manufacturing should accelerate investments in India. Our GDP estimate is from negative growth in the first half of this year. In the second half, we should see a positive growth rate of GDP, and for the whole year, it might be a negative single digit GDP growth. But from next year onwards, we see a 7 to 11% GDP growth every year for the next 4 to 5 years. There are several risks to our outlook. First of all, there should not be any new bank or NBFC failures in the Indian economy. We should also not have any war situation or distraction or excessive tension on the borders. We should also be able to continue our strong trade relationships with USA and UK. If these, these are the key risks. What we feel is that the Indian equity investor should be fully invested to take advantage of the positive cycle that we expect in the next 3 to 4 years. We at JainMatrix Investments have been providing direct equity investment advisory for the last 8 years, helping individual investors through deep and high quality equity research and model portfolios for the large cap stocks as well as mid and small cap stocks. So do sign up as a subscriber for our services and take advantage of this wonderful revival in the Indian economy and stock market.